Good morning, Mark Soderberg with ADM Investor Services with your morning ag outlook for Friday, November 1st. Mostly higher trade here in the ag space overnight. Corn right now is up 1 to 2 cents. Wheat prices are up 4 to 5 cents. Mixed trade in the soybean complex. Beans are up 6 to 7. We're being led to the upside again by bean oil. That's up another 80 to 90 points, while meal is steady to about $1 lower. Energy prices are higher, while palm oil prices are also higher, making a new fresh 2-year high overnight, giving bean oil prices a lift. U.S. crush margins have stabilized near $1.70 a bushel. However, bean oil, as a percentage of product value, did shoot up to 43% at yesterday's close, and that being a 13-month high, and just adding to that here in overnight trade. I thought yesterday's EIA data was supportive for bean oil as well. It did show production of biofuels, biodiesel, and renewable diesel. It fell 1.3% in the month of August to 455 million gallons. However, that was well above the 411 that was produced in August of 23. Industry capacity fell for the second straight month to just under 6.6 billion gallons annually, with the declines coming from biodiesel. Renewable diesel capacity that held steady at just below 4.6 billion gallons annually. There was 1.217 billion pounds of bean oil used in the production of biofuels. That was up 7% from July and up nearly 2% from August of last year. With only 1 month left in the 23-24 marketing year, I suspect the USDA usage forecast for bean oil at 13 billion pounds in the production of biofuels is about 50 to 100 million pounds too low. Look for a higher number from the USDA next Friday, which could also lead to a higher crush number as well. We do get the September census crush data out after today's close. We look for a record at about 188 million bushels processed. I felt yesterday's export numbers were supportive. Corn commitments right now are up 41% over a year ago. The USDA forecast is up only 1.4%. Bean sales are up 13% versus USDA up 9%, and wheat we're running 19% over a year ago versus USDA forecast of up 17%. The Buenos Aires Grain Exchange reports corn plantings in Argentina have reached 35%, up from 29% last week, and bean plantings are underway now with 3% of that crop planted. Wheat harvest has reached 8%. They also kept their wheat production forecast unchanged at 18.6 million metric tons. Weather in South America remained favorable in both Argentina and Brazil, with a good mix of rain and sunshine over the next 10 days, which should keep production prospects high. Here in the U.S., waves of precipitation are expected across the central part of the Midwest over the weekend into early next week. Some areas in the eastern plains could see 5 to 7 inches of moisture. Many areas will get another 1 to 3 inches. Go a long ways at reducing the drought levels, which have picked up here recently, and also lift the interior river systems. We do have Election Day, of course, next Tuesday, and USDA production and WASDE data next Friday. Overnight, D's corn, it just seems stuck between its 50 and 100-day moving averages. I look for it to stay within a 3.95 to 4.25 range leading up to next Friday's USDA. Jan beans did pop up over the $10 again for the first time this week. No significant resistance now to 10.18, which was last week's high. Meal just continues to trudge along this $300 level. However, we have held above the contract low at $298.50. And bean oil made a fresh 3.5-month high overnight. Next resistance not until just shy of 49 cents a pound. And wheat prices we ran into resistance at the 100-day moving average in Dees wheat overnight in Chicago, 577.5. No final word yet on the Algerian wheat purchase, expected to be about 500,000 to 600,000 metric tons. Most of it sourced from Black Sea regions at about $263 a metric ton. Thanks for listening, everyone. Have a great Friday and a great weekend.